I think we've got to start with Meta. It's a really interesting company to understand because beating the quarter gone, the social media advertising-supported business, Reality Labs will see greater losses. Capital expenditures will continue to grow. I've got a really big sense of deja vu. I don't know about you, Shweta, but what was your takeaway from that?
Yeah, well, first of all, thanks for having me, Ed. It's good to be here. My takeaway was that there are a lot of good things that are going on for Meta. And if we think about at a high level, yes, on the negative side, CapEx remains unclear. They'll probably spend maybe $50 to $60 billion in CapEx next year. We'll see when they guide. But that's a pretty big number. And the losses in Reality Labs, certainly to your point, is a concern. But on the flip side, what they're doing in terms of how they are leveraging Llama, which I believe is a stroke of genius on their part, to their own advantage, is amazing, especially as we think about engagement and monetization. Video recommendations alone are driving mid to high single-digit percentage growth on time spent. Impression growths are high single digits. Pricing is improving 11% for them. And Meta AI already has 500 million MAUs. And so the engagement on the platform is remarkable. And what they're trying to do is continue to be able to monetize on a go-forward basis. So we expect their revenue growth to be sustained at, call it mid-teens growth rate, even at current levels. And they are probably one of the biggest beneficiaries of deploying AI for their own advantage.
I mean, that 500 million monthly active users of Meta AI was arresting. But what arrested the market was the 2025 promise to spend. Just take a listen to what Mark Zuckerberg said on the call.
First, it's clear that there are a lot of new opportunities to use new AI advances to accelerate our core business that should have strong ROI over the next few years. So I think we should invest more there. And second, our AI investments continue to require serious infrastructure, and I expect to continue investing significantly there, too.
So in your note, Shweta, you talk about the new opportunities, the new revenue avenues that we're going to see. What are they? Articulate that for the market.
Sure. Well, in the near to midterm, it is leveraging these AI, the AI models and Llama to their own advantage around engagement and monetization. So they're making their recommendations better. An example would be unified videos. They're making a full screen video on their platforms across their apps, and that's going to drive engagement because it's live videos, short form videos, differentiated videos, all on one platform on a full screen. And that itself has opportunity to increase supply in terms of ad impressions in that format. In addition to that, they're using AI to make those recommendations more targeted. And they have not really untapped that opportunity as much. Advantage Plus is what grew their growth in 2024. In 2025, it's most likely going to be video recommendation platform and their video feed that will probably drive their advertising growth. In the mid to long term, there are several other revenue sources that they never had before. For example, business-to-business messaging on WhatsApp. That's probably 2 years out, but they're already monetizing that. And then beyond 2 years, Meta AI, in terms of adding advertising to their search feeds on Meta AI, in addition to subscription, just like ChatGPT or Gemini, are completely new revenue sources for them.
And they continue to see early surprise success with Ray-Ban Metas, the glasses. Shweta, you do not cover Microsoft, but you do follow Alphabet, the parent of Google, and Amazon that reports after the bell. And in the context of cloud, I look at what Alphabet said, and last night Microsoft, both seeming to suggest that the number 3 and 2 players took market share from AWS, Amazon, the number 1 player. Do you go into Amazon's earnings tonight with that analysis as well?
Absolutely. I mean, the top 3 players in the market are Amazon's AWS, Azure, and Google Cloud. What we also saw with Google Cloud, because I do cover it, is 35% cloud growth rate, and in part driven by them not only gaining share, but also part of expanding market TAM, which is their AI services and products that really driving that growth. If we look at their 10Q and the backlog, the demand trends that they're seeing are pretty amazing. So going into Amazon's print, our expectation is that Amazon's AWS cloud revenue likely grew 20 to 21%, and the street's looking for 19% growth rate. That's our expectation, and we expect that to accelerate in the fourth quarter.